Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go.
Hi, everyone. Today's Wednesday, October the 1st, and this is the Moneyball Morning Report for the Benzinga Pro platform. It's also day one of the government shutdown. Now, for most of us that watch, I did put a long form in our chat that explains what normally happens during the shutdown. The only ones that get hurt a little bit are small caps, but we are also moving into a seasonally strong pattern at the end of the year, right? The strongest 6 months of the year begin in October and end in March, statistically speaking. Now, when we take a look at the market in general, I've got it spread out in a 1 hour chart, and we're looking at this interesting tool, which is a combination of an Ichimoku cloud and a super trend. The only reason I have it there for you to look at is to notice that when we remove such a thing, we can essentially see that we are sideways and a break is very likely. Now, statistically speaking, the break should be up. Last month, statistically speaking, the break should have been down, but guess what? We only had 1 day underneath this value area, and then it turned right around and moved north. Liz Saunders put out an image here that said, on X, that said, large speculators have not been long the equities since March in general. And so what does that tell us? It tells us that there's a fuel event building, and a lot of people are leaning into something they believe, which, listen, here's the thing about markets. They move up, they move down. It happens. And we're going to have a move down at some point, but right now, every major dip is getting itself a buy. So today reminds me structurally a little bit of a potential price action event that might look like this. It retraces to the base of support and then turns around and rallies back. Now, pre-market, all the way down until just before the European Open, because London Open is at 4 a.m., we were very short inventory. And what are the traders doing? Completely unwinding that position. Now, notice, they did that in general yesterday, but as I have been mentioning, these kinds of wicks, they're the real deal, folks. It's the reason we need to expand, and if we're looking for a trade, we have to go, wait a second, where have the buyers been? And am I patient enough to wait for price action to come to me so that when I get the trade, I'm in the least risk exposure event? And that's going to matter. So take a look at yesterday, right? Absolutely savage on a 1 hour formation. But if we were looking for the top to short because we had a sloping VWAP down, we got some good trades. If we were looking for the bottom to go long, we had some good trades. And I think today's going to be the same way. Now, here's the line in the sand going forward. This anchored VWAP, and it's anchored because it's closed at the end of the day and a new one opens up. For 2 days, we've had this VWAP sitting here at around and about 6,760, so 6,760. At the break of that line, we are going to have movement. That movement could be a reflexive move up, a move down, and then another move up, a reflexive move up that traps longs into getting an early, and then a reversal event that gives it a bottoming formation, or it fades, it comes down, it fades into old heavy congestion of yesterday and begins to rise again. VWAP 6,701, volume point of control 6,711, These are the areas that we need to watch today because they were important yesterday. Have we broken the high of yesterday? No. Did we break the low of yesterday pre-market? Yes, but that's pre-market. So what are the traders doing? They are trying to find themselves positions where they can benefit with the least a bit of risk that can move it into higher highs, which statistically speaking, that's what government shutdowns do. They create some sort of, so the media comes out, says a lot of bad things, says X, Y, and Z, and the market inadvertently moves themselves negative too much, and then the rise of price has to make them buy to cover. This is the opening of a megaphone pattern, folks. Higher highs and lower lows, which leads me to believe that our value area high, way up here at 6,753, could easily be the frontline target. Are we sitting in a buy the dip zone? Yes, but the dips can be wicky. So look at the formations, see where they're trading. If you look at this high volume region down here where the support is, you can see buyers setting up at 6,694. Listen, if it comes in here, that's a fair buy. The question is, what's your risk? Well, where's the other congestion? Notice it goes all the way down to value area low. So if you take a long here at 66.94 and it loses 66.92, it could very easily go to 66.81. 66.86 was the number that I talked about yesterday, that it was a potential fade. It broke through that level. The put the put support, the gamma line there is 6,675. It continues to move up. The call wall continues to move down. And so they are in a price compression zone. Realize this. These guys sitting at the wall up here are going to do everything they can to force price back down inside of the pocket before the day is over. And so you can see the savage move up that comes all the way back down, and they're home free sitting here under the 6,725. Watch it. It's going to be messy today. Woo, take a look at that candlestick formation. 6,700, big fat round number. Wait for your trade. Let's take a look at the NQ. And here's the thing, folks. I heard from a trader yesterday and said, hey, I don't really trade these things. I trade metals and I trade gasoline. The storyboard is the same. It is the exact same. Just stare down where price action has been sitting. Look for where the buyers show up. What does that look like? There's no selling below. You've got no candle bodies sitting under the frame. And so when you lose this space, first thing, look at the trend of the VWAP. It's down. Look at the trend of the moving average. It's up to flat. Look at the location. We're in between value area high and value area low, as it is here in the NQ. And so what we can know is, hey, if it does not lift here right away at these wicks, you can stop yourself out rather than allowing yourself to draw down and move back up into this range. Now, some traders will say, hey, listen, I am only taking a one lot, and I'm okay if it moves 100 points against me. Listen, if that's your game and you are capitalized enough, have at it. But realize that that kind of motion can accelerate very quickly under these volatility patterns. Okay? So notice where we are right now in the NQ, 24,750. That's a buy zone. It's a buy zone. Why? Because we faded. We tested it as resistance. We broke through it as support, and then we came back and tested it as support. So how can you look at this bounce up and go, all right, I'm going to position along right here at my 27,740, and I'm going to try and take it to 27,800. How can you do that? Because you know that they've been buying here. Trend is up, and you are above the VWAP now. You know you can't hold it for a big runoff into the sky because that VWAP is down. So that's a scalp trade. From if you want to go for 20 points, if you want to go for 40 points, just pay attention to what the market is telling you as opposed to what you want to tell the market. Okay? Levels above in the NQ, 24,860. Levels below, 24,570. Notice how the traders bounced off the put wall this morning, 24,650. Okay? So, if they've been completely negative in the overnight, that's negative inventory, right? And they are reversing their positions, where should they go? Back to the top of heavy congestion. That's why the target's 800, in my mind. Also, we've got the point of control, 24,826. We've got value area high, 24,871. And we have yesterday's closing VWAP level at 24,821. Okay? That's my thought on this. We're in a range. Eventually that range is going to break, and we have to be very conscious of that. The call wall is well above us, 25,000. The call wall and the 0 DTE walls, the same. The put support wall for the 0 DTEs is what we just bounced off of. Value area low, although penetrated, comes back and tries to hold. So look for the double bottoming formations when trend is down and momentum is down, as we see both here. Then you can move to the next space, right? You're going to put in, when trend is down and momentum is down, you are going to retest areas that are low. See how nice this trade was? Kaboom. Right up there. What does it imagine that we do? We look for what's been happening in the near term, in the recent past, and we assume that the near future is going to do the same thing. The only thing we have in our favor is how much risk we put on the table. That's all we've got. If I can't handle the risk, I don't take the trade. It's as simple as that. That's the only way we manage our money over the longer haul. Let's go to gold. This, beast mode. So I listened to the ever crazy Martin Armstrong. A lot of people don't like him. He can be a pretty abrasive guy. But what he does know is market cycles. He called 6,000 for gold before it rotates over because this is bad, but it's true, we're slipping into a war cycle. Okay, so you're going to see industrials, metals, commodities, and those sorts of things rise. Okay, now that we got that out of the way, it is what it is. It is what it is. Let's take a look at what's going on with the call wall. The call wall has been 3,900 since the beginning of the week. The 0 DTE call wall has lifted up into 3,900. If you've been paying attention, this call wall has completely been moved up over time. What happened to these traders in the overnight? Well, first of all, yesterday, I saw yesterday's motion as very bearish. Here's the crazy thing. It came in, tested the moving average, held the VWAP at 3,821, started unwinding about 5 a.m., and then it was all she wrote to the upside. Now, if you're looking at a 5-minute, you're going to see these wicks, and they're going to make you go, oh, wow, we could break down. Here's the thing. When in doubt, look to the left. See what's happening with price action in the near-term motion. And we could see this heavy congestion box, and that box said, listen, you can try to short at 38.48, which I did, and pulled it off at 38.42. But I expected it to go back to 38.38. And I think it missed me by a couple of ticks. But in any case, once it moves back out, what's it telling you? Well, what happened here? It moved back out, came back and retested, but look at that. Upward momentum. And we know that this move was so savage to the downside that there was a scramble to unwind. That scramble started stalling out at 3,880. Now that gives us this sideways formation, 3880, old resistance, new support, inventory accumulation. But have a look-see. Here's the call wall. If they cannot get under this call wall at 3,900, this market is going to scream to the north. Absolutely. Because there are a lot of folks going, gold needs a little pullback. But, I was reading Martin Armstrong. I have an Ask Socrates membership. It's very data driven, and occasionally he says wacky things, but he's built a machine from the 90s that collects vast amount of data. He's really consulted by many major governments across the world in terms of how money flows go. He actually helped create the euro. So, the guy knows currencies and he knows market cycles. And if this call wall here can't get broken down, see how they're trying to get under it? They are trying to get under it. So could you say to yourself, hey, I know they want to get under it, I'm going to short it. Well, what does the data here show? The data show that they're still buying the dip. So if you want to short, you better have a boatload of risk sitting in the pocket, or this is not going to be a pretty trade, right? Could it happen? Absolutely. But look at all the congestion of price action the traders are holding, okay? Dips are buys here. Could the dips be savage? Yes, but everything in the market tells us they are piling in to the future space. And dips, whenever they come, should be buy zones. Now, can dips be savage? You better believe it. So, caution. Trade the micros here if you want to, but caution. When in doubt, zoom out, look to the left, and build that cycle that tells you what's going on. Upper edges to the formation. Let's do a wonky little thing, and let's draw a Fibonacci through the value area high, value area low event. That gives us a support right at our 3,900. Next line in the sand, 3,950. Okay, let's take a look at SPY. All right. Same sort of thing. Look at this wick. I'm telling you, these are the days that we live in. What a savage wick. Holy smokes. What are we looking at? Lower lows. Could it be a higher high? Probably. Where are they sitting? Here. So what do you do in a space like this, right? I don't know if this is jolts or whatever it is that came out. Let's have a peek. It's probably 8:30, yeah? 8:15 ADP report. PMI is not until 9:45. ISM 10. Construction spending 10. All right. So whatever this is, notice it's building a range. Could you short the value area high at 666? Yes. Could you buy the region around 660? Yes. But I would not expect a trending day based on this kind of formation. Could it break out? Absolutely. Call wall above 668, the big resistance line for the weekly options and the monthly options, 670. Put walls 655 all the way down to 650. Do you think the traders are expecting volatility? That would be yes. Absolutely. Okay? Dips, buys, you're in good shape. Spikes, sells, you're in good shape. Just make sure you look to the left. See where the buyers, this is the range right here. See where the buyers have accumulated. Right? Look at your 4-hour candlestick formations. And then just go, okay, well, if this is the buying case, then you know what? I'm going to try and sell it there. Just leave it out there sitting. You've got your stop. prior high. That's how you set the trade up, right? Especially if it's going sideways. You just manage the risk. If you want to collapse into a 1 minute to help you execute better, that's fine, but zooming out is going to tell you where the price action is sitting. All right, everybody, take care. And remember, Wednesdays, I'm out of pocket in general. And so I'll see you on the streams when time allows. Take care.